Good evening, everyone. I hope everybody had a great weekend. Here we are, and moving into January further, we're going to take a look at the daily price action for January the 7th, 2012. And we're going to do the daily charts here. I've decided to hold back a weekly outlook until the mid of the month. All right, and we've got some possibly decent stuff on the charts today, price action wise. It is a Monday coming up, so taking the pips is optimal, but we do have a few signals on the chart that really might be able to give you an opportunity to maximize your time doing other things today. So we're going to start with the Euro USD, and let's go ahead and blow that chart up. Taking a look at the daily, we've got a clear price action candle here that's came into the picture, right at a previous resistance and then support area, just above a green zone. Okay, and usually these lines are put in as dynamic zones, okay, and ones that are applicable, but they're not necessarily the best zones. And of course, these zones are not buy signals. Things like these are buy signals. Okay, so I believe on the Euro USD, based on our price action review here, you've got two options, and this is going more into what I look to be doing the rest of the year, and showing you guys when I do these outlooks, looking for a drop of this during Asia, right? Taking a fib close as you can to the current support area, and then taking a long. At that point, you'll need to make a decision when you do get around the 31.15 area if you'd like to scale out or not. Now, this level here on the euro broke, okay, to the upside, and then of course we had that significant fall. But we just had a price action candle at that level. So my current bias for today on the euro is north, and that's the first time in a couple of weeks, I would say. I will short it though, however, with price action in an acceptable level, and that's going to be in on these gray areas around 31.55 to 31.60. If we get a little bit further up here, likely I'll still be in the long, and there really won't be any point of trying to go into too much nesting in your trading, right? Even one level, one trade a day is plenty acceptable, and once you take that outlook, you'll be able to just catch those 2, 3, 4, 5 trades a day of high probability because you're just in the zone. Okay, so this price action implies that it wants to go up, and if you're using EMAs and obviously in the past we used EMAs, but for all intent purposes, the same EMA that it would likely is going to hit, the 8, which is no longer on the charts, is at the 31.60 level. So I think this is going up. You have to make a decision whether or not you want to just take this trade based on this daily outlook, based on the price action entry. There's nothing wrong with that, and the level you're at, or if you'd like to try to get a further deep entry. But you have to realize you'll be below this now. So there's a decision there to be made. Your stop loss should be clear to you. We've been discussing this type of stuff. And once you get up into some profit in this red zone, you need to make sure that you don't get lose pips. At least get stopped out, break even if you decide to just hold it and it does crash on you. So that's the euro. Nice stuff today. Taking a look at the pound dollar, a similar situation. I feel the pound is going to have a little more problems today with the bounce. Okay, we've got a similar situation here. It really is between two green zones, and this is not a red zone still yet. I discussed this last week. I still think this is a green buy zone until we make one more attempt up, just because of the level we're at and this junk in here. So I don't think that if you were to change on your charts this to a red zone, you may have issues with that. I'm just not yet convinced. I think this is going to go up, but I think the euro is going to be a better opportunity. And if we do have a weak pound day, and we do get some euro pound movement, and the dollar index is kind of sticky, then this could really be just a hassle, the pound dollar today, for January 7th. All right, taking a look at the Aussie dollar. This is a little bit confusing here, huh? If you were to look at just this price action signal here in the middle of an area we've been in for quite a while, we're not at the trend line, so that clear short that I will take, and I've been implying I will continue to take until it shows me a reason not to. And it's a little bit trickier, but we are still between the two red zones here, number 2 here and number 3. So at this point, I think higher lows on the hourly was your best option in the Asian trading, but I will not trade this pair until it gets further down and gives me an entry around 104 for the long side, or it gives me a short on this trend line. I will simply not do anything with the Aussie dollar. All right, there's some scalps to be made in there. That's that's something I'm not doing. So moving forward here, we've changed the charts around on the screen. So now we have the euros all on the left side. So this is the euro pound, and this is purely for correlation. Just wanted to show you guys. I was talking about the pound could have more problems today. So I'm assuming that these higher lows will continue based on needing to continue that. I mean, we need to assume that's going to continue to happen until it changes, right? And that's really the problem with trading. You start there's an intuitive side to trading, but there's also the point where you're just not looking at the chart, and that's usually where you're trying to pick tops and bottoms and stuff, and not, if you're trying to do that, there's this might sound weird to say, but there's a proper way to do that, and there's a wrong way to do that as well. But you should not even have to do that at all. So looking now, I think the euro will be a better trade to the north side if we get this dollar index pullback. So all right, looking at the dollar index now, and it has hit the zone that we were expecting to hit, and it went a little more, didn't it? So I had this called out, this blue line here on the chart, and now price action, I'm looking for it to head back down, and around this this EMA, which likely will be taken off the charts here soon, and I think that's going to provide you that euro entry, and to be honest with you, I think that's enough pips for Monday, no problem. Just based on that. So I think the dollar index will give you the clue on the euro, and then just make sure using the euro pound that the pound doesn't get real strong and do one of its crazy overshooting types of things that could stall your euro out, which would mean that you'd need to have a little bit more money management involved and may need to adjust some things on the intraday side. But the plan stays the same throughout the day as we discuss every day. So, and here we are with gold. The plan has been since last week looking for a 4-hour higher low and then a daily pin bar to go north. Well, what do we have here on the chart? We've got a daily pin bar. That's support. Okay. But the top of it is at resistance. So there's two approaches here, I think. Trying to fib this and go, which last week was also mentioned, but it just went. So you could lose out on the trade, or simply taking this trade. Problem is, where are you going to put your stop? Okay, you're going to put it down here. Yeah. How many pips is that? Well, you got to be able to know, 10 pips on oil. How many pips is that, right? So, I think that simply the alarm here at 45, a price action entry, and I will take along on this. I'm not going to just take along on this on the daily after the end of this video. I don't feel that's the best situation. I would rather it just get a little bit more of a pullback. It is definitely a price action rejection, but the rejection is now back at the key support, the key resistance level. So this is a little bit more trickier than I had hoped it would have been this week. Yes, we will likely get a better entry, and if we do, it could be something like this, where you might make some pips on this one today, but the next price action entry might be really the one that provides the hopefully the trade throughout the whole year, right? I mean, we at least want to get this to the end of the quarter, second quarter, and like I said, I don't really see a reason for gold to continue to go down. It's just some jockeying between the dollar and safe haven, and it's a lot of fear, I think, and just about certain things that have happened in the market and so forth. And I don't want to use any buzzwords. We've heard that word enough. So you know what word that is. It seems like every month or two they come out with a new buzzword. But so this month we'll see what it is. All right. but just don't discount the fact, looking at that chart, that you should start to be looking for a long either way. And in New York, after COMEX opens on January 7th, you might be able to get that entry in right then and get that thing to break even and just have a either a wonderful day trading on that or a multiple day, depending whether or not this is going to be the entry or not. So I think it's just really pretty mechanical to decide or not, and either way you shouldn't lose money on a trade on that. Okay, looking at the euro yen, all systems go. There's nothing new since we've opened the Traders Lounge. This is headed north, and here we are at the top of this again. All right, and do I want to short it necessarily? No. Would I have shorted it last Friday? Yeah, but we've tested that. We've came back up, and now just to go out to the weekly chart for a bit. Does it have room to go a little bit further? Yes, it sure does. It sure does. And after it gets through here, it's got room to go all the way to 122. So it's still same play, same play. I think stick and move, but with the bias of keeping a piece on this. And quick look at the 15-minute chart here with a certain time in Asia implies you might get an opportunity here to take another higher low to make some early pips before mid-London. So nothing really changing on the plan though. You see this stuff day in and day out, that this is really a different perspective at the market, isn't it? So all right, let's go ahead and move forward. The Aussie yen has been in the red zone here. I've mentioned that I wanted to really know what was going to happen with the stock market, but we've got to take a trade on this at some point, right? So it's coming down now. I'm going to use the same implementation on the euro yen as the Aussie dollar, and basically this is the line I'm looking for, a higher low before that to get break even, to take some Monday pips, 35 to 50, and that's it. That's all I'm looking for. Not looking for this to continue on this Monday coming up. So same plan as the euro yen. The timing may be a little different. One may look better than the other, but it's just a matter of if you use your price action, if you know exactly what you're looking for, and you don't make it mysterious, where feel it out too much. If it goes green right here, I'm going to take it, or I'm going to wait for the candle close. No, just make your decision, have it in mind, and don't fret any little bit of pips you may have missed, because if you do take a more conservative approach as a candle close, in the long run, that usually will typically put more money in your pocket. So, all right. Last thing we'll look at here is the oil chart, and there's nothing really new since Friday on this. We did not bust through the 93. Of course, we made the target last week, and all of that started with the long right here, the whole thing. And all we did is really discuss the movement up. Couple opportunities for shorts before we broke this level, but at this time, we are at a level that a short is possible, and I'll be looking at that in the New York hours. But I think a short could happen, and it could still bust out. But we're at a level now with enough congestion where taking a short could be quite profitable. All right, I will see you guys in London. That has been your outlook for January the 7th, 2013.